Hello everyone, this is Ross Garcia with the Loan Modification Clinic, helping people throughout the United States with their modification. In 2001 to 2009, 2008, we had a real big increase in the market, okay? Now, people ask me, well, why is my house not going up in value? Now, if you live in California, Arizona, Las Vegas, your house might have went up in value, right? If you're in Illinois, Indiana, and certain areas, your house might have went down in value. But this was what kind of like the chart looks like. And we're in 2019, okay? Now, it might look a little different because sometimes the Wall Street market goes up and goes down. But in my opinion, this is what the housing market looks like, okay? So why is this happening? This is happening because your loan's getting transferred, and companies like PHH are going from Aquin to PHH Mortgage, okay? Now, the beautiful part about these programs is that we work with investors, okay? So picture it like going to a game and people are saying, hey, if you can't pay the house, I'll help you, I'll rescue you, right? So these are private investors. Now, your typical way of thinking, well, before we get into that, let's talk about the value of the house. Like, let's say you owe $350,000, but houses in your neighborhood have been going for 280, 190, 265. Then we have a big problem here because you're what they call upside down on your home, meaning that you can't sell it, you can't refinance it. So I'll erase this and we'll leave the housing market up there. We'll leave that up there. But now let's talk about your normal way of thinking, how people used to do business back then. Not our generation, but back then. And I also have modified my home. So when you look at the dollar bill, you're looking at a Federal Reserve piece of paper. Now, there's nothing federal about it, okay? But the Federal Reserve, they lend money to the banks. The banks lend money to you. Now, when the Federal Reserve gives the rate to the bank, they might give it at 0.5. The bank turns around and gets it from 0.5%. They give it to you at 6.5%, 5%, right? And what we want to do is we want to eliminate the bank. We want you to work directly with the investor, okay? So that goes back to, like I was saying, the investors are willing and able to help you with the loan modification. Now, they're not going to guide you through the process. That's why it's important for you guys to call 773-847-2200. And we do this throughout the whole U.S., throughout the U.S.A., okay? Doesn't matter if you're in California, Illinois, or any other state. Give us a call, set up an appointment. Now, the beautiful part about working with the investor is that, let's say that you have a loan of $350,000. You might be paying, $2,490 a month on your mortgage. Okay, that's with taxes and insurance. We'll call that principal, interest, taxes, and insurance. Now, what the investor would do is they'll say, okay, well, this is where she's at. Plus, she owes $20,000 in late payments. Okay, late payments. So, what can we do for her, right? So, what they'll do is they'll give you a loan of $280,000. Now, this is just what they would do, right? Now, where would the difference go? The difference between 350 and 280 is 70,000. The 70,000 would go in a form of a balloon, okay? This is what we call a balloon. Now, the balloon has no interest attached to it, so you don't have to pay it to the end of the loan. Now, this is like option A, right? And there is no interest on this. So your loan would be $280,000 with like a 4%. The Federal Reserve tried increasing rates, but they figured out that it could drive us into a recession. So we're looking at a 4%. You drop your payment from $2,490 to something like $1,700 a month with taxes and insurance. And the $20,000 you owe, either A, will be forgiven, right? Forgive, or B, it'll go into the balloon payment. So when you tell me that, hey Ross, you know, there's not that many options. No, there is a lot of options. When you're dealing with investors, investors are willing to give you something like this, okay? Because they don't want the home. And they have money, they have lines of credit with millions of dollars, and they say, hey, you know what? Let's just get this person caught up. Now, let's say the economy goes up again, right? Like the housing market, which I doubt, because we owe $22 trillion, okay? So this is a lot of money. Enough money to build skyscrapers in cities out of $100 bills, okay? And we're in deep trouble. Now, this is something that would work out for our clients. And the beautiful part about it is, let's just say you're saving on this deal, you're gonna save $300 plus another $490, so you're saving $790 a month. So this is every month. Now, when you do the calculations, you're talking about over $150,000 in interest savings, okay? Now, the reason your payment dropped is because they gave you a balloon over here. And a lot of people say, well, the debt's not gonna go away. No, the debt's not gonna go away. But you know what? Your payment is gonna be lower. And if the economy gets better, you could take that $790 and apply it to the principal of your home. So let's say you've been modified, or you bought this house and you've been paying the payment for 5 years of the $2,490. So if you've been paying that payment for 5 years, okay, no big deal. You still got 25 more years to pay. But if you stick to the program that we're giving you, you'll pay off that house in 10 years. Why? Because you're compounding the principal payment. You're paying $790 a month. So you're still making the same payment, but you're paying a lot less over here. So instead of, you know, paying $2,490, in your mind, you're still paying the $2,490, but you're taking the difference and you're applying it to the principal payment of your home to bring down that payment as much as possible. So, so give us a call, 773-847-2200. This is Ross Garcia, the Loan Modification Clinic. Have a great day.